Hello, this is Daryl, and I'm testing a new method, new for me that is, of trading. It's not really a new method. Very few things on earth are new, but this is a method I ran across when I was looking at a thread on Forex Factory that began in 2009. And it is all about pair divergence. These charts we're looking at here are line charts, which you select right up here, right? And the line charts then just give you a single line of closing prices in which to monitor what's going on price-wise. Down below here I have two extra lines. Not important for this method at all, just a couple of moving averages I've been playing around with. At any rate, here we have the euro yen on top, 4-hour chart, the Swiss yen on the bottom, also a 4-hour chart, and then we have blue lines, vertical lines on both of them at the same point in time. You notice these points in time match up as far as price highs. So what we're looking to do here is find actual divergence in price, and then go with the weakest pair according to the divergence. So this line here on the euro yen right up on top, now this is technically not really noticeable divergence because it's almost flat. It actually does dip 2 pips here, and this one dips significantly more. This one dips about 20 pips. So the Swiss yen is becoming the Swiss is becoming much weaker more quickly than the euro yen, and this is, for this type of trading, this signals a change in momentum, in at least in direction, and then the best method to enter this is to excuse me, watch for a close of the bar following this one to give us this high point right here as a point of interest where we think price may be faltering. And in fact, we can tell by the line it does. And also the euro yen, as well as the Swiss yen, falters. But we're only going to take one pair, and that would be this trade here, because the Swiss franc is showing more weakness than the euro yen at this point in time. So how do we enter this and how do we trade it? Okay, so let's go ahead and enlarge this so it's a little bit easier to see. Okay, and we have the 2 points right here that were on the previous screen. This is just an enlargement of those. So now let's see what would have happened on the next lower time frame, because then we can get a better entry, hopefully, and a smaller stop loss. All right, so now I'm going to change this to a 1 hour and then go find this location, which is right here, and we can see that we still have these we saw the same thing going on, but now we have two different high points. basically it's the same. It's just that on the hourly we have a higher close on this side and also a higher close on the 1 hour. And since our initial, these blue lines here mark the initial place where this occurred on the 4 hour chart, we need to go in from here 4 hours to get a beginning point. So this time happens to be 800. So now we're looking at 1200, which is right here. Okay, so I'm going to mark this with a little red line. So this is where actually this is where the 4 hour candle ends at the 11 o'clock hour. This is the 8 o'clock. Then we'd have 8, 9, 10, 11, and that would complete the 4 hours and the close of this one. So let's look at the 1 hour in candle terms. Okay, so there we have it. And our close on the 4 hour, as I mentioned, was this red line right here. So the absolute low of this 4 hour, the lowest open in this case, it could also be the lowest close, is just about the same right here. So the way that I would trade this is this candle is closed here. We have a potential, let me go back to the line chart here. We have a potential line here that is showing us divergence, as noted in the previous chart. And so we're looking to get into this as soon as possible. Going back to the candle chart here, and this is the first, this is the 12 o'clock candle, so this is the first 1 hour close after the completion of this 4 hour candle, which includes from here to here. All right, so, and I'm looking for a break of this low, which is right here, and this low happens to be 113.58. Okay, this low right here, 113.58, and that comes in right about here on this candle. And it does go down, but another thing I'm looking for is a small stop compared to how much I'm looking to make on this. The high here is about 26 pips from our entry. I like to leave at least 5 pips. Let me see, the spread on this one's a little bit bigger, so maybe 7 pips above there, 7, 8 pips. So my stop initially would be here. And in order to find out what my target might be, I have another chart which I'm going to introduce at this time, and I'll explain it in a bit. This is called an overlay chart, and it includes down here in the bottom right hand corner a number that gives us 2 times the average true range of both the Swiss yen and the Euro yen. Okay, and it happens to be 67 points. Of course, this was back in history, but averaged out the last 14 candles. Excuse me. 2 times the range of the last 14 candles. So that means the average range of a 4 hour candle would be about 33, 34 pips. So anyways, on the Swiss yen, I know this might be getting a bit confusing now, so if you have questions, you just ask questions. The Swiss yen at this point is, say, 33 pips, but we double that, so it's 67 pips. And this gives us our target. 2 times the ATR of 33.5, which gives us 67. So as we look back over to here, from our entry, which is right about here, we're looking for 67, and it does it easily in just a couple of candles. It goes down 85 to this point, and with a stop of about roughly half of that, we get a 2 to 1. Okay, so that's pretty much the first introduction to this. Excuse me, and how it works on a 4-hour chart. But I'm constantly looking not only on the 4-hour but also on the 1-hour. And then if I find something interesting on the 1-hour, then I would go down to a 30-minute to look for a better entry, and so on. Maybe with finishing up on a say a 15. I don't like to go any smaller than a 15, simply because of the more erratic type price action. Whereas generally on a 4-hour in particular, if you pick up a direction, it's going to probably continue for at least another 4 to 8 hours. So that may work a little bit better. Now, going back to this overlay chart, let me open this up a little bit. I've got it set to read better on a smaller time frame. Excuse me. On this overlay chart, we're looking at a few things here. Now, the main symbol is which is on the top left corner, is the euro yen. The sub symbol right here is the Swiss yen. The color of the sub symbol is orange, and the color of the Swiss yen line is whatever you have set in properties on your MT4 chart. The ATR is set for the last 14 candles. The ATR multiplier right here is set for 2. So that means it's going to take the average range of the last 14 candles multiplied by 2 to give us our target. The offset is, which is I'm going to change, so we're going to have so many crossovers. The offset is the distance in pips between the main pair of the euro yen and the sub symbol, the Swiss yen. And it's on the 4-hour, 30 isn't enough, so I'm going to set it for, let's say, 60. We'll see how this looks. Grid color, grid color, I don't even know what that, I haven't found it does anything, so I'll just ignore that. But what the other important thing is here, this also has the advantage of being able to mirror. So in other words, like, for instance, where I studied this first was the euro dollar compared to the dollar Swiss franc. And so as one of those is moving up, the other one is moving down. And that's a function, of course, of position. The euro is in first place is the primary on the euro dollar, and the dollar is the primary on the dollar Swiss. So, but anyways, I have the mirroring set to false. I'll give you an example of what the other looks like here in a minute too. But this doesn't mirror, so this can be easily also looked at by doing this, by splitting the screen so you're looking at the same place on each one, because we're looking mirroring, and these charts may look confusing, but that's because they're not set up properly. One's a 1-hour and one's a 4-hour right now. But going back to this chart, so we may have to scrunch this down a little bit to get our lines in here. And in here we can see how they compare. Now, this is an overlay chart. As soon as you start overlaying charts, you're going to get some subtle differences. So that's why we always want to verify on the real charts that just have the one pair on them, and not try and give us the average of the two pairs. Okay, and but this is gives us a general overview, so we can tell if there's a significant difference in we're getting higher highs or lower lows, and things like that. And let me see if I can find a good one in here. This takes a minute to refresh. There we go. Excuse me. And let me see. Well, we're close right here. You see, these don't line higher than this high right here. Okay, come on. This is why we use the vertical lines. So we see we have a difference. This one's going higher and this one's going lower, but they're not matching up. So we can look and see how much of a difference there is, and there's a 1 bar difference. So just for shucks and grins, let's see what this looks like. This is June 8th at 0800, and this is June 8th. Excuse me, no, this is June 8th at 00, and this is June 8th at 0800. So actually, it's unlikely. Two almost adjacent bars are going to give us a valid entry anyways. So let's find another one that's more obvious. Okay. Refresh. And if it doesn't refresh right away, you can just hit the refresh button. Okay, I'm not finding anything here. Okay, well, I apologize. Actually, I did find something. Where was that on the other one? That was right here on 614 and 613. All right, so let's go back to here. 614, 613. Okay. Oh, yeah. So that was right here. Right. But anyways, on this chart, it doesn't really show up. This shows up as being significantly leaning in the same direction. But when we go to our 4-hour chart of the Euro yen, you know, it's almost flat. The difference here is 2 pips on this one. See, the close is 50, and the close here is, actually it is the same. Okay, I digress, but it just looked slightly different. But that's why I use this one. Normally, I'm not going to use anything that isn't at least flat level or more like this, so it looks like you would get divergence if you were looking at oscillators. Okay, so I'm going to end this one right here. This will just kind of give you an idea of what to kind of look for. I have this overlay chart. It's available. All these yellow lines are just some other lines I was messing with, different time frames and yada yada. So if you have any questions, just let me know. Thanks.